Indeed, the political risks in the U.S. Have abated in recent weeks, and that was one of the reasons why the dollar had this week of reprieve last week, combined with the news flow on the vaccine. But the longer-term outlook likely to remain fairly negative. We think that we are at the beginning of a secular downtrend for the dollar, and U.S. politics will have a role to play, in particular the fact that the Biden administration is expected to focus more on the economy, on dealing with the COVID-19 pandemic, rather than really reevaluating the trade relationships of the U.S. With the rest of the world. So from that point of view, concerns about renewed U.S. trade protectionism likely to abate, and that should continue to boost global trade, global growth, and the dollar could emerge really as the biggest loser from any pickup or continuing pickup in global trade, especially against pro-cyclical currencies the likes of the renminbi, but also the euro, as exporters convert their export proceeds back into their home currencies, as central banks, seeing FX reserves growing, actually start selling dollars to buy other currencies. So that kind of diversification out of the dollar could indeed be the main reason for the downtrend in the dollar we expect, especially in the first half of next year.
Valentin, I want to shift your focus to the pound. As Jemana mentioned, it's a big week for Brexit negotiations, although we've said that many times before. But negotiations with the EU will continue this week in Brussels, and we're really coming down to crunch time here. The pound has had a strong run over the last month or so versus the greenback. What do you think is priced into the pound here, and what are the outer bounds when it comes to trading in the months ahead?
Well, I think that just discussions with clients, but also our own view is still that there will be a deal before year-end, before the end of the transition period. The week ahead certainly pretty key for the pound, given that time is slowly running out to reach that deal. Following the trade talks in Brussels, really until Wednesday, which will continue until Wednesday, we have an extraordinary video conference for the EU heads of states. We also have a plenary session for the EU Parliament next week. So these are key dates that could potentially push the needle towards a deal. That said, cautiousness likely to prevail, given that we've been there so many times before. So I think that investors will be looking for a tangible evidence that a Brexit deal is in the cards to actually continue to buy the pound from here. Needless to say, if the talks fail again, some cautiousness could mean that the pound will have to revisit its recent lows against the euro, against the dollar. I mean, hopes will continue. Hopes for a deal will likely persist, given that we have another EU summit in December. We have the final plenary session for the EU Parliament in mid-December. So not all will be lost if there is no deal this week. But I think that the blow to the pound, at least initially, could be pretty hard, given that we are almost at the end. So from that point of view, a fairly volatile week for the pound across the board.